Hi, guys. Hi, everyone. We're live. This is Angelette with Empire Realty. I am a real estate agent, broker, and I have with you for you today a special surprise, Crystal Reese Barnes of Northshore Lending. Say hi to everyone, Crystal.
Hello. Hi, guys. How are y'all?
So what we're going to do for you today is, like I said before, we are starting this real estate live show, and we'll be coming on to help you to walk through the process of purchasing real estate. Crystal will be with us to answer any questions you guys may have, and also to explain to you the process of lending and what goes on behind the scenes and why it's so important that you guys get all of the information that your lender requests up to them as soon as possible. So just before we get started, let's let Crystal introduce herself so you guys know who she is and why I think she's so awesome.
Okay. Hi, y'all. So I am Crystal Reese Barnes, and I actually have been in the mortgage business for 13 years. We opened Northshore Lending Group over here about a year ago. This is our mascot here, which is actually my little Frenchie. So remember this. But we are going to be logging in here just to teach you guys a little bit about the home buying process, different programs, credit, everything that you can possibly think of that with the home buying process. And me and Angelette work a lot together to make this whole entire process as simple, easy, and streamlined as possible, and so that you guys understand what's going on, so it's not a scary process. So that's me.
Thank you. So listen, a lot of times people think that buying a home is a really tedious process, a long process, a complicated process. But what we want you to know is that it does not have to be either of those. It is an important process, and definitely probably the biggest purchase you guys will make or anyone will make in their lifetime. So what you want to do, or what we want to do, is ease your mind, answer any questions you may have, give you some information that you may not have even known you needed. And this is not just for people who are thinking of buying homes in the near future. This show is for everyone. If you are not considering purchasing a home now, I think the information we give you, especially down the line as it relates to credit and how to manage it and how important it is, will help you when you're ready to purchase a home. Also, if you're considering relocating or changing jobs, this is the place for you, because you will understand how that job change may affect you in the future if you decide to purchase a home, or when you decide to purchase a home. Maybe you're even thinking about becoming a landlord, and you are your own landlord, right? Or a landlord, and maybe you want to live in a duplex. You're considering things like that. We are in the era where people are definitely realizing more now than ever the importance of wealth in real estate and how you can acquire wealth by purchasing real estate. So this is the show for you for now, for in the future. Do yourself a favor, turn on the notifications for this page. We will be coming live with the process. Crystal will be here with us at least twice a month. Every other Tuesday, I'll be off and on throughout the week to share more with you as it relates to other parts of the process. And that by turning on the notifications, of course, you'll know how to reach us and know when we're on, so that you can engage with us live. However, if for whatever reason you're watching us on the replay, our information will be posted in the links so that you can reach out to us anytime. If you have questions where you choose or desire not to come on live and ask us questions, you can totally have a consult with either of us, and you can reach us. Crystal, what is your website?
So my website is www.nlgroup, nlgloans with an S.com. That's nlgloans.com. I'm actually in the process of updating my whole entire website to make it a much, much easier. We're going to have some blogs on there. Also, we're going to have a super simplified application process. So you will actually see within the next coming weeks that it is going to be super simplified and easy to apply. So I'm super excited about that as well. But it's open and you can go to the website now.
And that's in loans with an S.com for Northshore.
With an S.
With an S.
Mm-hmm. Northshore Lending Group is, yes, what that stands for. nlgloans.com. Yep.
I'm sorry, I am trying to scribe this at the same time.
No, that's good. And also, if you ever want to reach me, you can also text me at any time. It doesn't matter. Texting is actually a lot easier. If you ever call me, it's something that you need to get with me a little bit quicker. I am on the phone a whole lot, but I do have assistants and other people here who can actually grab the call really quickly. So anytime you need me, you're more than welcome to always send me a text message. You're never bothering me.
And what number would they text?
And the number is 985-276-0830.
985-276-0830.
0830. Yep, that's it.
Okay, so Crystal's number is right at the bottom, along with her email address. Her website, and that is how you reach Crystal. Okay, so let's talk about this. Today, we're going to talk about the home buying process from both the side of the real estate agent and the side of the mortgage broker. Okay, I'm sorry, let me back up. I'm totally sorry. I assume people know this. I am a real estate broker. I have been in the real estate business for 13 years now. I am certified to assist veterans, veterans, first-time home buyers, seller specialists, expert in real estate negotiation. So the list goes on and on. The point is this. Credentials matter, experience counts. So for both, you have two women who are here with both to help you. And today we're going to get into this process. Now, generally speaking, the process there's a theory, which is the way that it really should work. And then there's a practice, which is the way most people work it. In theory, you actually get a pre-approved or pre-qualified first. You speak with the lender first. In practice, generally speaking, most people meet with a real estate agent. And a large percentage of people will go online and they will research before they even contact a real estate agent, right? They'll Google how to buy a house or things like that. So let's talk about practice. So imagine if you've decided that you've done all the research that you can, or you've obtained everything you can by Google, and it's time to speak with a person. Well, of course, you want to reach out to a professional, and I'm always available to speak with you. You have what's considered a buyer's consultation. In that consultation, generally speaking, you will bring to the table what you want in a house. Actually, we should back that up. And that's when I discuss with you the consult as it should be. First of all, we need to get you with a lender so that we can understand your buying power. And Crystal's going to explain to us what exactly that entails when you contact a lender to get pre-approved for a loan. Crystal?
Hey. Okay, so basically what happens, just like Angelette said, what's going to happen is you guys are going to go sit and consult with her. She'll send you guys over to me. At that point, basically what me and you do is we chat. We figure out what your goal is and what you're trying to accomplish, whether it's purchase your first home, it could be a move-up purchase. You might be trying to sell another one while you're purchasing this one. We might even just need to do some credit repair. It kind of depends on what's going on. But at the pre-approval process, this is where we figure this all out. So what will happen is I will take your entire application. We get all your info, name, social, date of birth, employment information, and your assets, which is bank accounts, 401ks, things like that. Basically what we'll do, we will pull the credit. The reason, and everybody, they're always like, oh, are you going to pull my credit at this point? The credit has to be pulled at this point, and the reason being is because all loan approvals are based off of your credit score and your open debt that you have. Not the balances on your debt, but your monthly payments. So yes, at this point, we will pull your credit. It is one of the most important parts of the entire process. It will also tell us what kind of loan program we can do. As these videos go on and you guys tune in, Angelette and myself, we are going to be telling you about a whole bunch of different loan programs. I mean, there's so many that we're going to go over. But at this point, we'll talk about some of them based off of your application and what's going to be best for you. It could be the type of house you're buying. It might be something that you needs a little bit of repairs. We have those. You can do rehabilitation loans, So there's a whole bunch of different kind of loan programs that we'll talk about based off of your credit score and how much money basically you have to put down. So we'll go over some different things like that. As far as the credit at that point, it will last because there's another question I get all the time. How long does my credit last? It will last for 120 days from the day that we pull it. So we won't keep pulling it. We pull it one time. We do your pre-approval. Once we have figured out, okay, I'm approved for X amount. This is going to be how much I can purchase up to, and this is the type of loan I'm going to use. At that point, I will send you back to Angelette, and based off of what I have told her you guys are qualified to purchase, you guys will then talk about y'all's part of the process where you look for your home. So I am going to hand that back over to her at that point.
So what Crystal just gave you is what I call your magic number, right? So we have your magic number, and that is not the amount that you have to spend. That is your ceiling. We cannot go higher than what you're qualified for. So at this point, you decide what it is that your criteria that you want in your home. I look at it like this. You have a side-by-side T, right? So you have your needs and you have your wants. This is where you decide what things you absolutely have to have in your home. Absolutely. And then on the T, the other side of it is the things that you desire, but you don't necessarily have to have it. For instance, it could be a fence. You have dogs, animals, or you have children, and you want a fence, right? Or you have to have a fireplace or whatever it is. These are wants. These are things that are negotiable, these are desired. These are negotiable, whereas the wants are the needs are absolutely non-negotiable. So as your real estate agent, what I do then is I will go and I will search the market, the database, what we call the multiple listing service, and other places to see exactly what's currently on the market that meets your criteria in full, the entire criteria, in addition to making sure you stay within or underneath that ceiling. Now, understand your ceiling is the dollar amount you can purchase. And I may be touching where Crystal can jump in on us with us, but where you can purchase your dollar amount may or may not include your closing costs. And so this is where you need to really have a conversation with your lender and know what you're going to have to come to the table with. Because if you're pre-approved for a $200,000 loan, and then we spend all of the $200,000 allocated to lend, you have to come to the table with the difference, which would include your closing costs and your down payment, depending on the loan that you have been approved for. Crystal, can you touch on that a little bit?
Yeah, absolutely. There's two different parts of the process. Basically what happens too when you guys find your house, that's when she'll hand you back off to me and you start working together again. Finding homeowner's insurance, we order a title for your title quote, and we can go into detail about all that stuff later on in some of our other videos. But anyway, so at this point, what's really going to happen is I'm going to, well, because y'all already found a house, Angelette, is that, y'all already found a house?
We haven't found it yet. We're making sure that we have enough money to cover everything before I actually go and take it.
Gotcha. So there's two parts. There's of a loan. There's going to be down payment, and then there's closing costs and prepaids, okay? Your down payment is going to depend on your loan, okay? For example, if you've heard of a rural development loan, that is 100% financing. There is no down payment, okay? If you qualify for an FHA loan, you have to put down 3.5% of your purchase price. So that would be what the down payment is. So if we're using a $200,000 loan, let's see, what would your down payment would be? Not good at math calculator. So I'm going to calculate this. So your down payment would be $7,000, right? Okay. That is not your closing cost. Okay. That is your down payment. When you also negotiate with Angelette, you guys will have to put normally, and I'll let her hit on this, you have to put down some sort of an earnest money deposit on the contract or something, some sort of deposit. So with that being said, those deposits are going to always want to be made with a check from your checking account or your savings, because the reason being is all of that money that you put down, let's say you put down $1,000, that is going to go towards this down payment. So on the $200,000 loan, if you were coming in with $7,000, you would then come in with $6,000 because you already put down your $1,000. Okay, that money that you put down is going to go towards your down payment. Okay. Closing costs. What are closing costs? Okay. Every single loan is going to have closing costs, no matter what. Okay. So what they're going to consist of is your title fees, which all of these numbers are, there's no set number. There's no set percent, like are closing costs 3% of every single loan purchase? No, that's not the case. I mean, there is no certain percent, because you have your title fees, which are going to consist of, your title insurance for owners and lenders, which protects you if anything's ever done wrong on the title. And then you have all of your abstract, your notary fees, your, overnight packages, your recording fee to record the mortgage in the courthouse. All of that is going to be your title fees. Again, that number is based off of your loan amount, okay, purchase price. We won't get that until you guys are under contract. I will help you guys to find a title company. We'll get the quote. We'll chat about it. But we always want to make that fit into not a crazy amount of your closing costs, okay? The other part of your closing costs is going to be your prepaids, basically, so homeowners insurance. The way homeowners insurance works is we have to collect your whole first year of homeowners up front in your closing costs, okay? If you're in a flood zone, then we have to collect the flood as well. And then if you're doing an FHA loan or any other sort of loan that requires escrows with your loan, an escrow is collecting monthly, collecting what your homeowner's insurance and your property tax is. That, as we have to start your escrow account, we have to collect for a couple months, depending on your loan, on your closing costs to start your escrow account. So that's something else that's going to go into your closing costs, okay? And then a prorated amount of your property tax. That's based on how many months you're in there. If you move in June, you're responsible for 6 months. If you move in November, you're responsible for 2. So that's all going to depend on what time of the year you move in, but that is also a closing cost. So how do those work? When I approve you, I also tell Angelette, here is your magic number for your approval, and I need you to request X amount of closing costs, and we kind of just come up with a number, when you guys start looking. If y'all are in a flood zone, we need more, it's going to be a little bit higher. So at that point, what the closing costs would be is normally we would get Angelette maybe to say, I'm going to tell her, hey, look, we need the seller to pay for and cover, $5,000 in closing costs. If you guys negotiate that and they cover it all, then you don't come in with any of that other stuff that we just talked about, the homeowner's insurance, the escrows, the title fees. That would be covered by your seller concessions. which is what Angelette's going to negotiate for you guys. Therefore, you just come in with your down payment, you know. So it's kind of what that is. Just touch on that just a little bit. I guess, did I explain that good?
Yeah.
Okay.
So,
okay. I can
know.
talk about this and go on and on and on. So I'm trying not to.
Me too, right? This is what we do, and we're here to help. We want to help you to understand what's going on, and that it is not this thing that, one, you can't obtain, and two, that is, you know, just so complicated or convoluted. That's why you hire professionals. And we're here to help you. But let's keep talking about this process. So one, you get pre-approved, right? First step. If you have a buyer's consult first, we go back to getting pre-approved, right? And that pre-approved, let me help you to understand, that is as much or more for you than anybody else in this process. As a buyer, a seller is going to want you to be pre-approved before they even think about looking at your contract. As a buyer, you want to make sure that you can afford the home that you're looking for, that you fall in love with. What you don't want to have is shopper's remorse, where you go and you're window shopping and you fall in love with something and you realize that it is outside of your budget. Or the other thing is, compromise is great if you choose to compromise, but if you are making concessions based on what you think you can afford, and so you're giving up a larger room or a larger kitchen or a fenced, you know, a larger backyard or a neighborhood that may retain its value better than another, because you assume you can't afford it, that is really hurting you. So the first thing you need to do is get qualified so that you know what you want to do based on the numbers. And I always say the numbers speak in real estate. The first, your number is your approval number, right? The next number is how much you actually want to spend on that house of the number that you've been given by Crystal, right? Your magic number. Because again, you don't have to spend it all. You can, you don't have to. We just can't go higher than that number. The next thing we would do is, after the buyer consult and the pre-approval, is we'll actually go and shop for your home, which is the exciting part, right? Because you've dreamed about this and you've decided that this is where you want to live, and let's go see what's on the market. Great timing. It's perfect. What you want to do is not necessarily want to have to, but it's wonderful when you are in what we call a buyer's market, where there are more houses on the market. I'm sorry. More buyers on the market. That's not it. More houses on the market than buyers, right? Which means that the numbers are in your favor. The numbers are in your favor. The sellers want to move their property, and so the prices might have to come down because the sellers are competing with other houses. So it works for the buyer in that case. The reverse of that is the seller's market, where there are more buyers than houses. And so the prices on the houses stay higher, because basically it's a matter of supply and demand. So as your realtor, I'll discuss with you what kind of market we're in so that you're aware of what you may be dealing with, and so when it's time to write an offer, you understand that your offer should be based or indicative of what the market's saying. So we shop for a house. We write a contract. Right? This is where you found the home of your dreams and you are ready to commit to it. So we write a contract, as is Crystal. And our contracts are based on state required contracts. So right about now, I think that contract is 9 pages. I sit with you, I go over that contract that encompasses everything, explain to you what it is that you are agreeing to, because the contracts are binding. And then once we've written the contract, as Crystal explained a few moments ago, there is a deposit that is required. When you submit the contract, your pre-approval letter, when we submit it to the seller, once the seller agrees, there is a deposit that is required. When we're writing the contract, we're going to write in the dollar amount of the deposit, or if you're dealing with certain other not lenders, but banks, or depending on the type of house you deal with. So if you're dealing with I know for sure if you're dealing with repossessed property or EO, they request earnest money deposits. If you're dealing with a regular resale property, it is specifically a deposit. We'll get into that later, but I did want to explain to you that there are two different things happening right there. But either way, you will have to come up with a sum of money that you have decided that is the money that you're going to put in on the table to kind of say, I'm serious about this. And as she expressed, this is something that is going to be deducted from the sale of the home at the end. So you will come to the table with less money than you would need to, because you subtract out this deposit. Okay, so that can be countered. So, once we've written the contract, I submit it to the seller's agent, and they take it from there. The seller can accept, they can reject, they can counter. For these purposes, let's say they accept, right? So you have an accepted offer. And what we do now is we submit this offer, signed, fully executed, to your lender. In this case, the lender is Crystal. So I'm going to send that information to Crystal. And we will schedule our home inspections if you choose to. Now, a home inspection is not something you have to do, but it's something that's highly recommended. In this case, a professional or a person of your choosing will inspect the home and give you what I call a report card. They will give you a report of the condition of the home, not the value, the condition. Based on that condition, you make a decision on whether or not you want to move forward with this sale within a certain number of days. For these purposes, we're going to assume that the home was great, it passed with flying colors, and we are ready to move on to the next step. This is where Crystal, the mortgage lender, takes over. Mortgage broker, sorry. Crystal?
Oh, okay. So at this point, when you guys actually are under contract and you have a house, at that point, I get a copy of the contract. Basically, what we will do at that point is we have to order a title that I was talking about before, and then we'll search for some homeowners insurance, find out flood zones, all that fun stuff. At this point is when we will have all our exact numbers. We'll already, Angelette would have already negotiated everything for you to where we know if we have seller paid concessions, how much our homeowners insurance is, are we in a flood zone, how much is property tax, how much of all are all our closing costs, okay? So with that being said, once we have all of that stuff together, okay, at this point, me and you work with me, and you work with me and my team over here at NLG. You work with us in getting your whole entire deal through processing. And basically, what that means is we get all your numbers, we send out, we'll register you with the lender after we decide what lender to go with, what interest rate to lock you in at, so on and so forth. We'll send out an email to you guys with all of the loan documents and disclosures that you do need to sign. Hold on one second, y'all. Hold on.
So guys, really quickly, while Crystal is taking that conversation, as you can see, we're always working, right?
I'll be right back.
Crystal's taking that conversation. There is, let's just talk really quickly. When she gets back, I'll have her explain it. I have to sign something real quick, y'all. I'll be right back. Sorry, Angelette. That's okay.
Sorry.
We're in real life, right? This is what we do every day. And just so happens, I am not in my office right now. I am taking this from another location, a remote location. So really quickly, let's pause for a second. Crystal, when she comes back, she's going to explain the difference between why she said she'll send it out to a lender for you. I know, based on my experience, that people tend to think the lenders do everything in-house. There's a mortgage broker, and then there's a lender, and Crystal will explain that. And just FYI, there's a real estate broker and there's a real estate agent. And really quickly, I'll explain that. So I am a real estate broker. The difference between a broker and an agent is that We both go to real estate school. We both take an exam so that we can understand and indicate or show, demonstrate that we've learned the basic principles of real estate and we pass the exam and get our license by the state. But brokers actually go back for more education and literally have to pass another exam. There are associate brokers that work under brokers, and then there are brokers who are managing brokers for the firm. So my company is called Empire Realty Out. When you explain sending it out to the lender, how does that work? There's a lot of people that a lender is a lender and they do everything in-house. Can you explain?
Right. So basically, there's a lender, there's a bank, and there's a broker. We're a broker. The difference is this. A bank, they're going to have way more strict guidelines. I don't know what all the banking guidelines are, but you go directly into the bank. Let's say you go into Chase. You sit with one of our guys there and you do the loan with them. You're only going to deal with Chase and the people over there, okay? With a lender, a direct lender, it's same thing. You go to a direct lender. That could be, there's so many different direct lenders, but the direct lenders, basically, you deal with just them. Let's say something doesn't work out and you happen, unfortunately in this business, a lot of stuff is underwriter discretion. So if we can paint a pretty picture and make it all make sense and it works, then great. There's things that we can get through that may not have gone through or whatever the case may be. Let's just say something doesn't go through, right? With a lender, that's it. It's turned down. You can't go anywhere else. I am a broker, so I am signed up with about 15 different lenders. Those are all my investors. So when I take your application, I look at it and I say, okay, based off this credit score, this type of loan, this down payment, this is what lender we are going to put your loan with. Now, you keep dealing with me. You never deal with the lender. You deal with me, okay? But it gets sent to the lender. By doing that, you're going to have way lower fees than banks and lenders. And you are also going to we have much better interest rates because you're not at the bank. The banks have overhead. The lenders have overhead. And all of this is we're just going to the lenders. We gather up, and that's part of the process. We gather all your income documents, which we gather in the pre-approval process, W-2s, and we can go over that again another time because that takes a while too. But all your financials. So we take all those financials that we gathered, we take the title quotes, the insurance quotes, the purchase agreement, we put it all together, we send it to the underwriter, okay? And what we also do is at that point, you're gonna receive a big loan package and everything is electronic, everything's electronic signatures until the very end, okay? So you'll get your loan package, you sign all of that, and then the underwriter is gonna start underwriting your file, okay? My headset is dying. Your underwriter is going to start underwriting your file. And at that point, also, while the file is getting underwritten, you are going to also talk to Angelette throughout that process because that's when you guys are going to be doing a lot of your home inspections. The very last thing that we order is going to be your appraisal, okay? So we kind of, during processing, you're going to work with me on the loan side, and then you also work with Angelette still on the inspection side. She can go into details. I kind of talked about that a little bit with the inspections. But once you're done with inspections, then we'll order your appraisal, okay? With all of this information that we have submitted in processing, the lender is going to come back, and they're going to say, congratulations, you have a conditional approval, okay? Don't panic. That means you're approved. That's a good thing. Cheers. A lot of people freak out. They're like, oh my God, what does that mean? You're asking me for more paperwork. The underwriters, once they review your files, are going to ask for more paperwork 99% of the time. It's little things like when I initially collected your bank statement, you may have had a new one that came out. So we need a new bank statement, or a pay stub may have came out. And some of the stuff I know that they're going to ask for, I don't get it all from the beginning because it's not necessary. And like I said, some stuff's underwriter discretion. They may or may not ask for it. So why have you go get all of this stuff from the beginning when it might not even be asked for? But they're always going to come and ask for things. Inquiries on your credit report in the last 120 days. What are all of them? Did you open any new trade lines? Are they already reported to the credit? Things like that. and they won't have the title and appraisal back by the first time they look at it. So it's always a condition. So at that point, what we do during the processing part is all of that. Now you will work with Jessica, who is my processor over here. You'll get introduced to all those people through the process, but she will help us to get this process way quicker. Through this process, there's a lot of people we have to get on the same page. As Angelette knows, you have your agents, your selling and buying agent, you have your seller, your buyer, yourself. You have the lender, you have the insurance company, appraiser, title company, all of these people. And you might have a whole nother transaction that's going on, for this closing. So you have all these people you have to get on the same page. So during this process, all of that is going on, okay? And we keep you posted throughout the whole process. Once your file gets into underwriting, you will have constant updates. You get an email update when it goes to the processor, when the processor looks at it, when the title's ordered, you get updates on all of that stuff. So you'll always know where everything is in the process. But that is the longest part of the process. So if the underwriter asks for anything else, normally when they ask for it, by that time we would have the appraisal back. So we get the appraisal and all these goodies and we put them all nice and pretty with a nice little note on top and send it back to the underwriter. And they normally look at it within 48 hours. They'll normally look at it, and then they will issue what is called a clear to close. And that's the best part. That's what everyone always wants to hear. Is my loan clear to close? So clear to close means every condition is clear. Your appraisal came back good. The value's fine. Your insurance, your title work, there's no liens on the property, nothing. Your credit's perfect. Everything's good. And me, Angelette, and the title company will get together and we'll schedule your closing. And that's basically, the closing is the end. That's when you officially do not have to send me any more paperwork after you sign the paperwork. Don't go get your credit pulled. Don't go even rent anything up until you sign on the dotted line, because your credit is tracked through the entire process. It actually sends us an alert when you go open something or get your credit pulled, and then we have to re-pull your credit to see what it is, and it can turn down your loan. Don't go into these car dealerships and you're like, oh, you're just leasing a vehicle. No, you still get your credit pulled. It still goes on your credit, and there's a lot of other things, me and Angelette on, you guys are going to have to keep tuning in because you're going to learn all kind of good fun stuff through this, but we will do another thing on do's and don'ts while you're in the process, because there's a whole heck of a lot of them, but that's a whole nother thing in itself. So anyways, we get the clear to close and we're done and we go to closing. Angelette, at that point, what you do is you will actually sign an entire closing package in front of the selling side of it and our side, and it's signed in front of an attorney. And that all, you have to go in and actually sign that paperwork, but that's the end. That's it. And you get your keys that day. Everyone always asks, can I send you anything else? And do I get my keys? Yes.
One thing I'd like to jump in and say is let's back up for a second. Like, we literally just went through the entire process for you.
A lot.
But one thing I want you to understand is there are things that are going to come out of your pocket. One of the things that are definitely going to come out of your pocket, besides what you need to close, besides what you need as a down payment, is the inspector. If you're going to hire a professional, that is paid generally the day the inspection is done at the home, directly to the inspector, out of pocket by you, the buyer. The other thing that you need to understand is what an appraisal is. Whereas the home inspector gave you a report card as it relates to that particular property that you were looking to buy, the appraiser is giving a report not to you, but to the lender as it relates to the value of the property. Now, we didn't touch really a whole lot on this, and we will talk about it in depth another time. Maybe I can get an appraiser to come on and explain this to them. Just never know. I think I know one I can reach out to. He just might. So here's the thing. The appraiser is going to give you a value, but that money is also money that is going to come out of your pocket. It is ordered by your lender, and Crystal, correct me if I'm wrong. It is ordered by your lender or your mortgage broker, and they will call you, and that is funds that is going to be paid out of pocket in addition to and before you close the deal. If the property does not appraise, then those two things that I just discussed, the inspection funds and the funds for the appraisal, they're non-refundable. So if it didn't appraise or you didn't like the condition of the property, yes, you are out of the deal and you can move on to something that will appraise. So what you can afford, for instance, let me back up. Say, for instance, the appraiser came back high, right? Which is good for you because you contracted for a certain dollar amount. And while you have a contract and while the appraiser came back, let's say it was a $200,000 contract and the house appraised for $205,000. That is great for you. You do not have to renegotiate this situation. You just got a home that's worth more than you contracted for. On the other hand, if it is a $200,000 contract and it appraised for $150,000, that's another situation. That is where you literally have to opportunity to go back to the seller and say, listen, we contracted for $200,000. The price is $150,000. The appraisal came back for $150,000. We'd like you to reduce the amount of the home. The seller can reduce it, or the seller can choose not to reduce it. But in this case, the lender, Crystal, you want to speak to this? In this case, this is not a situation where we'll be able to move forward based on your lending terms. Crystal?
So, short appraisal. What does that mean? Okay, let's say, like example, $200,000 that we're using, and the property comes in for $190,000. Okay, you can only finance up to the value of the house. Okay, appraised value of the house. If it's worth $190,000, that is max that we can finance. Okay, now this is when the agent comes back in, and I will talk to Angelette and I'll say, hey, this came in. It's a little bit short. We are going to have to negotiate something with the seller to reduce the appraised value, and we can get an addendum to the contract stating price due to appraisal price being reduced to $190,000. Does the seller have to reduce? No, it is completely up to them. Can some things change on the loan? Yes. If they do not want to reduce and you still want the home, can you purchase the home? Yes. So let's say the seller says, yeah, we're going to reduce to $190,000, but they were paying $5,000 in your closing cost. They might say, hey, yeah, we'll reduce to $190,000, but we're not giving you any money towards your closing costs or prepaid. Well, that means you have to come up with that money and we have to figure out something, okay? There's a whole bunch of things we can do at that point. You can get a gift from a family member if you don't have it. We can talk about stuff like that another time. You can use 401ks. We could do things like that. And it may be something you had the money, you just didn't want to use it. And hey, if you can get money from the seller, why not get money from the seller? But if it doesn't come in, they can change all the terms at that point, because in the contract, it says, I am purchasing the house, and this isn't the right verbiage, Angelette could tell you. Basically, I'm purchasing the house for $200,000 with the appraisal coming in at $200,000. So once it comes in lower, it can change the contract. Right. If you want to back out, you can back out, due to short appraisal, if they don't want to adjust it. But also, the other thing is let's say they don't want to reduce it to $190,000 and want to keep it at $200,000. Can you, as the buyer, come in with the extra $10,000 over appraised value? Yes, that is completely, totally up to you. I will give you all your options and you choose, but it does adjust, obviously, some of the numbers, because your money to close, your funds you have to come to closing with, will at that point adjust. But yes, that would be addendums to the contract that would change the contract,
So
appraised value.
Basically, you can see why you need a real estate agent. A lot of these things come up at the end, and mortgage brokers and lenders are lenders. Real estate agents are real estate agents. And what we do is different, although we seem to work seamlessly together. The other thing that I want to mention before we jump off is I drop below. There is a link below that if you have any questions and you'd like us to reach out to you, if you will go ahead and click on that link, just fill out the form and we will be happy to contact you directly and speak with you regarding your specific needs. If you'll be ready for pre-approval, what credit score is needed for a loan, whatever that is, whatever your questions may be, go ahead and click on the link below, the bit.ly link that's dropped in below, and go ahead and answer the questions to the form. And Crystal and I will reach out to you to answer your direct questions. And ladies and gentlemen, thank you so much for joining us for this Real Estate Live. We will be back with you with more information on all sorts of things relating to real estate and how you can be prepared to buy your home, sell your home, and repurchase another. So with that said, again, you can reach Crystal with Crystal. Where can we reach you and how?
Yes. Text or call on 985-276-0830. That is my cell and it is the best way to reach me. And or my email, which is Crystal, CRYSTAL @NLGloans.com. You can reach me either of those ways. And I'm actually super excited about doing this with you guys. I absolutely love what I do, as stressful as it can get. I love what I do, and I'm super excited to be educating everybody on this to make it less of a scary process, because everyone thinks it's scary, and it's not. Plus, you get to deal with us.
Right. Right. And again, my name
We're
is
not scary.
Jackson, and I am a real estate broker with Empire Realty here in Louisiana. I'll be happy to answer your questions. I can be reached at empirerealtyla.com. My email address is Angelette at empirerealtyla.com. And I will drop below all the information on contacting me directly. And again, you can make it easy just by clicking the link and filling out the form, and we will reach out to you. So until next time, I'm Angelette, and this is Crystal.
I'm Crystal.
We're signing off, and we'll talk to you guys later. Have a great day, and thanks for tuning in.